In this video, guys, I'm going to look at how do we make more money as traders. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. Alright, so the question we all ask ourselves as traders is how can I make more? How can I make more? How can I do better? And this applies even if you're losing at the moment. If you happen to be at a phase where things aren't going right, or maybe you're new trader and you're losing, super normal, happens to every trader or almost every trader, no problem at all, then this could be a case of, okay, how do I lose less money? Whatever the kind of level you're at, it's moving yourself up that equity curve, getting an equity curve going the right way, in a steeper way than it is at the moment. And in this case of losing, maybe shallowing out the losing curve so that at least you're trying to kind of get it back and stabilize it and hopefully get back things the other way. So there's a few steps to look at. Now, a lot of people go, okay, make more money, trade more size. They default to that straight away in their mind. I've got to trade size, got to trade size. Listen, you don't have to trade size to make money. You can know yourself. You could look at the market moves, the market you trade, and think, hey, if I traded small size and got kind of the meat of a couple of these moves, maybe two days a week, that will be okay. Let's say 2 days a week and one I lost this. You recognize that there's still the kind of moves there without having to be trading 100 lots at a time on a futures contract, 200 lots. You don't have to unless you've got obviously really super small short-term scalping strategy. So size isn't always the answer. Size comes into it at some point, but there's a few things we need to do first before we start to do that. The first thing and the easiest thing to address, it's nothing easy in trading, guys, is to reduce your losing trades. So yes, sounds great on paper. Well, great, thanks very much, Mr. YouTube guy. You tend to reduce our losing trades, I know that. Yeah, okay, so what we're trying to do here is identify the biggest losers first. So we go back, we assess our trading, we assess the patterns of our trading, we look at the biggest losing days, biggest losing months, whatever it may be, and there's always a commonality between them. There's always an attribute that flows through, whether it's because you've had a few losing days before, then you went on tilt and just hammered it into the ground and managed to dig a big hole for yourself, whether it's you're trading a choppy environment, whether it's you're trading an asset you shouldn't be trading, there's always something. So once you identify that and you go, right, how would my P&L look if I reduce the top 5% or 10% of my losing trades, or 2 losing trades, 3, whatever number it is? Wow, look at the difference in P&L. For many people, that takes them from a losing trader to a profitable trader, just eliminating those 1 or 2, 3 really bad days. And so really focus on that. It sounds boring, it's not very sexy, I get that. Trading size is far more sexy. Everyone thinks, yeah, I'm trading massive size, but listen, if you just eliminate those horrible losers, your P&L is going to be massive improved. So first thing is to focus on that. Find those big losing trades, those big losing days, and see if there's a commonality between them. And very often there is. Very often there's a theme or thread running through those, that if you can work then solely on eliminating that, and if you're a subscriber, guys, you know we talk about identifying these specific things and eliminating them from our trading, you will immediately make more money. You don't have to go into more size. You can do this, and also your trading becomes a more solid foundation. If you haven't got this vulnerability where you end up wiping out every so often, then you can build from a base. Of course you're going to have losers still. We're not saying eliminate all losers, but we're trying to identify those ones that are really damaging to the equity curve. So that's the first port of call. The second is to run your winners longer. So again, very easy for me to stand here and say this, but if we can find a way of identifying the very best trades we've got, again, we're just kind of flipping on its head, guys. What we're doing is reducing the kind of losing trades and trying to expand the winners, find the attributes of the winning trades, and then find and look for times when maybe there's more juice in them. Now, this isn't always going to be the case. This isn't always going to be the case, and we can go then to step 3 here. But very often we're in a great trade, and many of us will cut that trade too soon. And if you look at the history of all the winning trades you've got, majority of them are probably cut too soon. So you can almost add a thing and say, hey, what are the attributes of the winning trades? They're this. So when I'm next in a trade that's got that about it, should I now look for extended targets? Should I look for double what I normally look for? Because all of a sudden, if you did that, your top winning trades, doubling the amount on them, you're massively increasing your P&L, especially if you're reducing the biggest losers. These small little tweaks, it's not about the meat in the middle so much and the kind of making little bits and pieces here and there are normal trades. It's those big losers and big winners. If you can shrink those down and increase those big winners, wow, that's have a massive dramatic effect to your P&L, and you'll be making more money. Number 3, trade bigger size. Here we go now, we're getting to the point with trade bigger size. So once we've identified that and we've got a solid foundation, we know our losers, we know our winners, now we start to increase our position size. Now we look to dial up the risk a little bit when conditions are right, which brings me very nicely to number 4, be bigger in winners than losers. Now, because we've already done this work and worked out our losing trades, the attributes amongst our worst losing trades, the attributes amongst our best winning trades, never always going to be 100%, of course it's not, but we can perhaps start to dial up the size a little bit on trades that look like they could be the bigger winners, that look like the right market environment, that have the right attributes, that the right setup, the right everything that fits into place. That might be the trade that you start to dial the risk up on. Is it always going to win? Of course not, but you've now done the research to back up that kind of thesis and that approach. You say, right, now in these type of trades, I will trade 1.5 times the size or double the size or whatever you're comfortable with your risk management. And the trades that are losing attributes, again, you don't know them, but I'll start to dial down the size. And that also may be a market environment, market conditions, whether you traded very well the last week, whether you traded very poorly. All these parameters and variables come into making that decision. But it's not always about increasing position size. Tackle that one first, then that one, then start to increase your position size. But then if you can, add the extra layer and go a little bit more advanced and say, hey, how can I work out how to be bigger in my winners than my losers? So yes, my position size should work. If I've got a profitable strategy and it's working and I double my size, it should make twice as much. But I can now really extract a lot more juice. Maybe I can make 3 times as much by making sure that if I can, and I get it, guys, you can stand here and say all these things in theory, but it's doable. It's doable, it's tricky, it's challenging, but this is a way to approach it rather than brute force, kind of just position size, more size. Easier, and it gives you a better foundation as well, because more size will just exaggerate these losers. If you've still got this kind of danger of you wiping out on a day or really hammering on a bad day, it's going to be just exaggerated by the fact that you're trading more size. So cap down the head, work on that, and then you start to work on these 2 things, and then you can start to make more money and just improve as a trader generally. All right, guys, take care. See you in the next one. Bye-bye.